notice that they are here. Hey Gigi, how was your day, guys? First day and ready to learn. That's good. Up 5R today, Lo. Amazing. Great. Gigi, I'm down 1.5. I took only 2 trades, then I had to leave to study. My exams are starting soon. I'll take a couple of trades more in the afternoon. I actually traded AMD. I wanted to catch a parabolic reversal on it, so I tried to short it. I think it was here on this 1 minute, but I broke my rule on this short, so I lost half R. And I shorted one more time right here, so I lost 2 times on this one. Half R loser here and 1R loser right here, or the other way around. But I see that Lenny actually traded it much better than me. Rose, so R is the amount of money you are willing to risk per trade. We here are trading in terms of R's. It's different for everyone. It's the fixed risk. For some, the 1R is 1% of the account. For some, the 1R is $50 risk per trade. Maybe it's $30 risk per trade. Maybe it's $100 risk per trade, depending on your risk tolerance. Perfect, Rose. How do you calculate your R, Simon? I have a fixed R risk, and if I lose half of what I wanted to risk, that will be half R for me. If I want to risk, or if I'm risking the full risk I went in with my hard stop, then it's a full R. That's how I'm calculating it. Bang, in the open, I post my watch list in the chat room, and I keep watching them the first 30 minutes or 1 hour. After that, I just go through the stuff which I watched, which Peter watched, which Thor watched. I just go and scroll through them just to find something which is trading clearly and which has a clear price action. If I find something which is really extended, I look for a parabolic reversal on it. If something which is trending or chopping around, I wait for a breakout on it or a trend continuation. Perfect, so let's go through the trade, guys. Make sure not to send more than 2 trades in the off-topic chat so that we can go through them all today. And regarding scanners, Harry, there are no scanners which I recommend. Depending on the style, you need to figure out the scanner you want to watch. I personally watch the multi-strategy scanner and the RSI Extreme. If you are trading breakouts, you might be interested in watching the breakout scanner. If you are watching the breakouts, you might be interested to watch the breakout scanner. What scanner do you recommend? Trade Ideas. It's really customizable, but we share it here. It's a little bit expensive for some, but it's really good. Finviz is also good, and it's free. So yeah, let's go through the trades. Lenny traded AMD, and I love how Lenny traded this thing. And one thing Lenny mentioned right here, that he didn't like entering after this hammer on the 2-minute chart. I might agree with that. Like on this candle, this exact candle, I might have not taken it to the short side. Why is that? Because it was wedging, it was forming small ascending triangle. I like that it did a fake breakout right here. This was something which I really loved to take the reversals on. Then it started making higher highs and higher lows. It could have simply just broke out on this very candle. So what I would have done, I would have waited to see at least a new 1-minute low. It would have been either on this candle or on this candle right here. This was a little bit risky, but it was still good. And what would have been my stop loss right here? It's never the week. It will be the consolidation area right here if I take it to the short side. You held it nicely and you started partialing at the 9 on the 2-minute chart, which is not bad. I don't have the 5-minute chart right there, but it went all the way down to the 9-moving average on the 5-minute chart. I love how you traded it much better than I, and I'll let you know my 2 trades on this thing. Both of my trades were losers, and I basically broke a little bit my rules on this one. First of all, it was extended from the 9-moving average on the 5-minute chart. I love that. no new 1 minute low since it started the trend until this moment right here. I wanted to short it here, but it wasn't clear enough, so I ignored it, avoided taking it to the short side in this candle. I saw that it was starting to hold the high of the day here. Did an engulfing candle, but I don't really trade engulfings. I want to see dojis or shooting stars before I take any trade. That's my confirmation most of the time. There was on the 2-minute chart. You could see here a shooting star at the 2-minute chart, but it was forming an engulfing on the 1-minute chart. If this candle was a reverse hammer right here, it would have been good, but still wasn't perfect. Was good, not A plus setup, but it was a good setup. Shorted it, immediately started going against me. That was my stop loss right here, and I exited right there. Continued looking at it. It continued going to the long side. Small candle at the high of the day, and again here I broke my rule. There are 3 patterns which I want to see if I am shorting based on the 1-minute chart. 2 dojis on the 1-minute chart, or 2 hammers on the 1-minute chart, or after that a good looking 2-minute candle, or one of the rules which I'm using to short a parabolic reversal, a wide bar candle, inside it a small bar candle, and then a new 1-minute low. None of that happened. Those rules are applicable if I try to catch it when it's going on the way up. Now, why do I like this entry right here? It clearly struggled at the high of the day. You are having a daily level right there. Small head and shoulders pattern on the 1-minute chart, and then a new 1-minute low. So yeah, this was good. I love your patience, Lenny, and you caught this one really well. Hey Anne, you also shared with us DKS here, but I don't see any trades. Is there any specific question you wanted to ask about this one? You did not take trade. Is there anything you wanted to ask? Where would I enter on this one? I'm not sure I would have traded this one. I mean, looking at it, most of the move in the pre-market, $6 move in the pre-market, and I told you, when I see this much of a move in the pre-market, I am not really interested in taking it to the long side. It looks like it's an ABCD pattern right here. It's breaking right at the open. If I would have taken it, and if I wanted to trade this thing to the long side, this candle would be my entry right here. It's breaking above the consolidation area. It's squeezing above you up. I take it to the long side and I get subbed out, and that's it for me. I wouldn't risk it anymore. Andrew is still there. He's trading every day in the chat room. He is talking about his trades in the chat room, but he stopped doing recaps on YouTube. No, I don't think I would have taken this thing for a 5-minute open range breakout. Maybe right here after those 2 weeks, but again, I don't love taking stocks with the direction of the trend if they make most of the move in the pre-market. If they were going sideways in the pre-market, if they were at least trending, if I could see something happening in the pre-market, I would consider trading it at the open. But if I see this all happening and then I try to take it for a 1-minute open range breakout, because I know myself, I would take it right here, and then it just immediately goes against me and gets me stopped out, I will not watch it. I shouldn't have even traded it on this candle right here. But let's ignore this price action right here. If this didn't happen right there, and you see that it broke VWAP up, it squeezed below VWAP up, it came back above VWAP up, you see double confirmation candle on the 1-minute chart, it's breaking the high of the day, this is definitely a good entry right there. But because of this price action, I wouldn't really care about a 5-minute open range breakout on this thing. What about this week on the 2-minute chart? There is no 2-minute chart here. On the 5-minute chart, this one right here, and then taking it to the long side here, right? This selling wick right there. Well, if you are talking about this wick right there, it already did its job. It already squeezed below, and you see that it went all the way to the daily level. The daily level held up and it started going back up. It started forming some sort of an ABCD pattern right there. And again, if not this price action right here, I would have taken it, but it's just my style. I'm not saying that this type of setups is not working a lot. It's just a personal preference, and I don't like taking them. It does, but remember, you will have this price action, right? Or loss. You could have this, then you could have selling pressure right there, then you could have a buying pressure right there. If you have most of the indicators going in your favor, then that's good. Here you're having a selling pressure, but you're having it above all the moving averages. You're having a double hammer confirmation. You have a stock which gapped up. You have a stock which is moving above view up or closing every time above view up. You have a stock which is making higher lows on the 5-minute chart. Against you, you have only a wick on the 1-minute chart. And if you go for all those probabilities against this one, those probabilities which are showing you that this is a long would definitely be heavier, right? Lal, if you can make sure to send the screenshot in the off-topic chat so that we don't miss it. Perfect. JP, let's see what you did on this one. First try looking for a reverse ABCD pattern, entered early due to FOMO and got stopped out. And I see this. Let's see first of all the 5-minute chart. So look at these guys. Huge drop right there, and basically after a drop like that, we would be short biased, right? We will be afraid that the stock will go without us. A little bit FOMO. It's finally making us a pullback, so we're taking it to the short side, and that's what you did. And you got stopped out because your stop loss was the high of the consolidation. After that, huge engulfing candle. Took it to the short side one more time. Maybe you realized that you were chasing it, so you bailed on it on the same candle once it started going against you. And after that, you saw that it was holding, so you re-entered one more time. Was that what happened there? I assume that was it. So let's go through your entries. First entry right here. You see that the stock sold off a lot. When I see stock selling off a lot, dropping a lot, I would be looking for a pullback, for a parabolic reversal. Definitely not taking it to the long side right here because this is a huge candle right there. Then it's going up. Look at this, buying wick, buying pressure right there, a doji, and it's going all the way to the consolidation area. Yes, you went to the short side below the resistance area, but it was starting to pull back, right? It was starting to do higher low waves, kind of similar, something like that. There is still no new low. There is still no confirmation for the reverse ABCD pattern. I'm definitely more short biased, definitely not looking for a long setup right there. But before that, just wait for a confirmation, right? So you took it to the short side on the way up. You did get a tight stop loss. It didn't work out. I personally would have waited a little bit. Then you're having an engulfing candle. Why wouldn't I have shorted it on this engulfing candle? I think it's around 20 or 30 cents right there. And Oxy usually doesn't make a huge move. I mean, continuously. For 30 cents stop loss, you'd need a 60 cents move. After it already did a $1.50 move, that's a little bit too much for me. So I wouldn't have entered it right here, because if I take it to the short side here, and guys, he said it's a hotkey mistake, so it's fine, but covering it, why wouldn't I take it on a new 1 minute low right here? Because basically that would just be a really wide stop loss. We're still getting within the range. Remember, this is the low of the range, maybe this is the low of the range. You could think of it both ways. And if you are getting inside a trade or getting into a trade within the range, our stop loss should be the range, right? So basically around 30 or 40 cents stop loss would have been a little bit too much for me on Oxy. I would have either let it go without me, or I will wait for it to form some good pattern right there. Now look at this again. This entry, I wouldn't have taken it again for one reason. It's breaking this small consolidation right here, and then it immediately squeezes up and closes back in the range. This is just for me getting choppy inside the range. I would just wait a little bit more. After that, two good looking candles, 2 weeks on the top, literally at the low of the previous consolidation area. This candle right here or this candle right here would have been good entries. Why is that? Because right there you could simply just tighten your stop loss and you go in for the breakout. Still, you got in here inside the range, and I think you managed it well. You put your stop loss somewhere right there, since you didn't get stopped out on those wicks right there. And a little bit early partial right there. This partial was smart. I love this partial. You took a partial at the low of the day. More partial on a new 1 minute high. So this is amazing. Look at this, guys. Stock is dropping down, making sort of a fake breakdown, closing as a hammer. Some people might take this opportunity to take it to the long side, since it already dropped a lot right there. It's still extended from the 9 and the 5, making a hammer at the low of the new 1 minute high. So that partial was smart. I love that. Then it pulled back up, didn't get to your break even, started working out more where you took more partials. Now this long was also good. I like it. On the 5-minute chart, it's a new 5-minute high, second candle. It is a little bit late, but remember, it's good to get an entry on the first candle. Second candle is a chase, but it's fine. Third candle is just too much. So you got it on the second candle, not A+, but it's good. I like that you didn't chase it anywhere there. You see that it tried to sell off, and I noticed this happening a lot. Stocks usually tend to pull back to moving average crosses. If I see that it's starting to form reverse ABCD pattern, it forms the reverse ABCD pattern and then bounces of the moving average cross with a hammer. That's a good indication for me. I usually wait for the next candle to get an entry. You entered earlier, but still that's good. Stop loss would be somewhere right there, and I assume that was your stop loss, and you started partialing on the way out. So yeah, this was good. You managed it well. This short was good, and I like how you managed it. A little bit early partial and a little bit early entries, but good job there. Oh, so it was on SSR, and that's why you tried to get entries on the way up. Yeah, still good job there. Gigi, let's see your trade, and then we have Charles. So Gigi, first trade, long, waited for the bounce with a 3-cent stop loss. Sold too early, too impatient. Now look at this. This was amazing. You see that M is dropping a lot at the open. The next candle is making a hammer or the doji. It was a doji. And then a new 1-minute high. This wasn't bad for a quick parabolic reversal right at the open, right? You take it to the long side, put your stop loss below the budgies. I never use the wicks. And then you start taking partials. And what was your stop loss? Was it below the wick or below the body? If it was even if it was below the wick, you still got the 2-to-1. Looking at this move right here, it looks like a 2-to-1 there, and then too much partials. But I could understand that it was getting closer to view up, closer to the moving averages. It's good that you at least held it for it was 3-cent stop loss, and on the first partial you got around 12 cents. So yeah, I mean that was a good one. I mean around 4 hours to 5 hours realized after all those partials, if not more. Okay, this was good. I love it. Then you took it to the short side, and that's amazing. Remember guys, when the stock is dropping down a lot and we are trying to catch a reversal on it, we don't catch a reversal on a weak stock because we believe that it will go all the way above view up and even more than that. That could happen, but when we're catching these type of reversals, we are going in for a pullback. We simply want to catch a pullback. Looking at all the time frames, it's below the moving averages on all the time frames. On the daily, it's uptrending, which is one pattern going against us or one chart going against us. Other than that, it's below all the moving averages. If I see it below all the moving averages, then I'm definitely more short bias on it. You see that it did small ABCD pattern above view up, engulfed on the very next candle on the 2-minute chart, selling weak on the 5-minute chart, new 5-minute low right there, new 1-minute low right there. Stop loss would be somewhere right here. I think this blue line was your stop loss. I mean, just to give it some room, not because this is technical level. If you want to have a technical level for your stop loss, it would be either this moving average or this top right there. But personally, once it starts working out on all the time frames, new 2-minute low, new 5-minute low, new 1-minute low, that would be somewhere right there. This is a good partial. I love how patient you were. You held it all the way to the daily level, and then you exit the rest there. No, not everything. I see more partials right there. Third trade, long, extended from the 9-moving average on the 5-minute chart, bounced from the previous day close, doji. You traded based on the 2-minute chart and on the 5-minute chart, and you took partials all the way to the 9 on the 5. And you made a lot of money trading M to all direction, long, and you partial. Then you get into the short side and you held on really good to this one. Then you are taking it for a parabolic reversal to the long side above the previous day close, and you held it all the way to the 9-moving average in the 5-minute chart. Really good job there. I took the ABCD above view up for a 5-minute open range breakout as a gap for confirmation. I see you took it right here, right? You saw this one, you saw it squeezing above the moving averages, new 5-minute high, and you took it for a 5-minute up in range breakout. This is not bad up in range breakout, because when you took it to the long side, J-Bone, it was above all the moving averages. It was going above the pre-market level right there. It's trending on the daily chart. Yes, it dropped a lot, but then it immediately squeezed above view up. So you tried to take it to the long side, and it just failed. So I think even the 5-minute up in range breakout wasn't a bad idea right there. Charles, let's see what you did there. And yeah, you've did partials. So GG, on all of your trades, my first partial would have been around 20 to 30 cents, because there was still room for the stock to move more, right? They never were into levels. Your second trade, let me actually open it again for those who can't follow us. So right here, this would have been only 20 or 30% partial, because it's still below moving averages, below view up, below everything. This is a nice squeeze on the 1-minute chart, so this would have been around 30% or 20% partial for me. And once it gets into this moving average right here on the 1-minute chart, it will be around 70 or 60% partial for me, because it's more weak than it's long, and I would just be a little bit careful about it. Here, this would have been a big partial for me, definitely around 50%, 60%, because it's the low of the day. The risk to reward is good. It got all the way down there, so not bad partial right there. When you take it to the long side, this would have been only 20 or 30% partial, because it still has room to the 9 on the 5. The 9 on the 5 would have been a 70% partial. So if it's a really strong resistance area, a level which I'm used that the stock is bouncing off, it's a big partial on it. The low of the day, the 9 moving average on the 5-minute chart, horizontal moving average 50 or 200, those are big partials for me. Other than that, it's 20 or 30. I almost never take only 10% off. So let's see what you did here, Charles. You traded Oxy to the long side. And actually, we went through this trade, right, with some of members. Or this is not Charles. This is Charles' trade, right? I think you and someone else and Lenny took the same trade. Yeah, it is Charles. I thought that I'm watching the same trade again. Yeah, exactly. You see this? This was not bad. I will not go through it again, but it's literally the same pattern. Moving average cross, literally the same entry. Instead of partialing, you add to your position on this small ABCD pattern. I wouldn't have added right here, because this is the third continuous candle. Like first, second, third, and after third, I usually expect a bounce, so I'm a little bit careful about adding after the third. Still, I see a pattern there. I still see that there is room, at least to the 9 moving average in the 5-minute chart and view up, which you took partialed at, which was smart. Above view up, it looks like an ABCD pattern right here. I personally wouldn't have added, because this was already a huge move. And before an add, I usually wait for a pullback. There was no pullback there. There is a pullback on the 1-minute chart, but the 5-minute chart is clearly still going up, right? No pullbacks there. You added more right here, but again, it's just simply going straight up. And at any moment, it could just start doing the pullback. So on the way up, I never add. If it's going up, pulling back, holding a level and coming back up, that would be a good add, and then I'd move my average. Why wouldn't I add on the way up? Because I really had a good entry right there, and I know that at one moment or another the stock will do a pullback, and my adds on the way up simply moving my average higher and higher, and the moment that pullback happens, it will just simply get me off the trade, and I don't want to get off the trade. If the stock is really strong, it could just continue going or uptrending till the end of the day, and that's why I usually try to add only after the pullback, so that I know that this is the high pivot point, this is the low point, it bounced out of here. The next moment when it breaks here, most probably if it's uptrending and pulling back, it will pull back to the previous pivot point if it's strong uptrend. Still good job, Charles. J-Bone, let's see what you traded. Setup ABCD pattern, type C. Indicators confirmations. semis were strong today, and you can see an uptrend right there. It pulled back to the 9 moving average on the 5-minute chart, formed a W pattern, broke above the daily level right here and above the consolidation area. It was close to the 9 moving average on the 5-minute chart and the 50 moving average on the 1-minute chart. Entry, you went in at the breakout at 360 and 33 cents. Your stop loss was a new 5-minute low, which was the previous 5-minute candle. Wanted to get to 2 to 1 for the break of the high of the day, but you got 1.25 hours. Good analysis, but I missed the big move. Didn't get it earlier because the stock was below the 9 and the 5 and below the 50. So look at this, guys. This was really smart. I love how J-Bone traded this. You see a stock which is uptrending, you try to avoid chasing it. You try to chase it a little bit, but I see the loss was small right there, and you kept watching it because you believe that it will work out, right? That is, it's going up, it pulled back, did the first high, and you avoided taking it right here because this was a parabolic drop, right? That was parabolic reversal. I see. This is a parabolic reversal but failed. No worries about that then. So it's dropping down, it's getting into the 9 and the 5. When the stock is dropping parabolically to the 9 and the 5, we don't catch the first high. We wait for a W shape, which happened right here. And then we either enter on a new 5-minute high after the W shape, or we enter at the breakout. If we are entering at the W shape, somewhere right here, we are entering inside the range. Our stop loss, the last V shape. V and VW. This is our stop loss. If you are getting in at the breakout, then our stop loss only a new 5-minute low. So you took it there, you partialed at 2 hours or more than 2 hours, and unfortunately it got back to your break even, which caused you to miss the move. And it's totally fine. I mean, you respected your rules, it got to your break even if this was your break even, and you bailed on it. I would have done literally the same thing. After partial, I automatically have a hard stop at break even. If you didn't partial, I bet you would have stayed in this trade and you would have got most of the move right there. I mean, I've been following this strategy since the beginning of the week. When the stock sells and drops down, the moment it drifts below the 9, I take a position in. Usually the price goes back to the 9 and usually breaks and goes to the 20. So above the 9 EMA is my first target, and the 20 is my second. Is that the right strategy? What would that be called? Do you go with the direction of the trend, Shweta? It would be good if you can send me a screenshot. I'll be interested in watching it and we'll take a look at it. You would put your stop loss below the 1-minute chart consolidation area, and I think, yeah, this below this 1-minute chart in the consolidation area, this was a new 5-minute low, because if you look at it, this is 935, right? 1 2 3 4 5 6. So this was his stop loss below the consolidation on the 1-minute chart. That was a new 5-minute low. Sam, if you can send those screenshots in the off topic so that I don't miss them, and thank you. Will I be able to watch this later? I haven't yet, but I see it being recorded. Yes, it's being recorded and it will be on YouTube. Okay, perfect. Now let's see what you did on Oxy. Set up a reversal, indicator confirmation, exhaustive volume at the low of the day on the 2-minute chart. So that's the 2-minute chart, and you're starting to have exhaustive volume. You're having an increasing volume. Not so climactic. This actually is really good. This is increasing, not so much, but it's still an exhausting volume. It's clear that's above the average right there. You're having a hammer on the 2-minute chart. That's it, a hammer on the 2-minute chart, and you're having another hammer on the 2-minute chart. Right at the previous daily high, and it was extended. It was at the daily level, and it was extended from the 9 moving average on the 5-minute chart right there. So you entered on a new 2-minute high, and stop was 2071. It was somewhere right there. I think it was the break of the week right there. Wanted to get to 2 to 1, which is the 9 on the 5-minute chart, got 175. So J-Bone, did you get it once to the long side, then it got a fake breakdown which got you stopped out. Yeah, I see that. This wasn't bad. I mean, I would have tried the same thing. Looking at this, you take it to the long side, on a new 2-minute high, it gets you stopped out for a fake wick, gets squeezed back up. On this candle, I would have waited for this candle right here, but still, this is a good one. You put your stop loss down there, or just give it some room. The previous 1-minute candle, the previous wick right there, we don't use the end of the wick, and you held on all the way closer to the 9 on the 5. But yeah, this was a good one. Good job on this thing. You made your loss back and you got back into green. I love how much you're holding into your trades. Let's see what you did there, and then T chart. Could I have held longer even with the new 2-minute low? Yeah, J-Bone. I usually hold longer even if there is a new 2-minute low. 2-minute lows, I could hold against that, but new 5-minute low, that's definitely a signal for me to bail. Perfect. Now let's see beyond. You got into beyond. This is the 5-minute chart. You get in at 9:55, 9:55. This is 9:45, 9. This is the 5-minute chart. Yeah. So you got in somewhere on at 194.30, somewhere right there. Actually, this is black on black, which is not working. You get in somewhere right there. So see that it's getting extended from the 9 moving average on the 5-minute chart, making a doji. You're getting in on a new 1-minute high and starting partialing all the way up to the 9 moving average on the 5-minute chart. This is a good setup. I would have been just a little bit cautious because I don't like how those wicks are looking right there. Reverse hammer, after that hammer, after that huge drop right there, selling pressure, doji, another doji. I would have waited a little bit more. If it got so heavy on with the price action, I mean that red tick, if it couldn't just break this area right here and it kept holding it, or if there was a huge bid on the level 2, I might have taken this trade here to the long side. Other than that, I would have been just a little bit cautious. I mean, looking at it, it's not bad. It went all the way to the 200 moving average on the 15-minute chart. So you are having a moving average on your way, a support, right? You're having a doji at the low of the day. You're having a stock which is extended from the 9 moving average on the 5-minute chart, and you're having a new 1-minute low, which is amazing. Most of the stuff are there. There is no exhaustive volume, and there is no good looking 2-minute candle or 2 good looking 1-minute candles. Other than that, some setups were there. It's not, some indicators were there. It's not an A+ setup. It's still a good setup, and you managed to make it working. So good job here. T-chart took Apple for a 5 or 10 minute opinion range breakout. Little bit late entry. Did you try to get an earlier entry, T-chart? Or you intended to wait for it to break the daily level right there? You wanted to get in at the break of the high of the day. So look at this 5-minute candle, which is close to VWAP. That's a good one. The first 5-minute candle was $2 candle, which is a little bit too much for Apple, right? 2-minute chart, I like this hammer. You're having first of all white candle. It tried to sell off, it couldn't sell off, and then it closed as a hammer. On the 1-minute chart, sort of an ABCD pattern right there. This could have been concerning me a little bit, but looking at the intraday that it's holding above VWAP, above all the moving averages, it was more bullish than it was bearish. You're getting in at a new 1-minute high, or I would have tried to get in at a new 1-minute high and tighten my stop loss right there. The break of the high of the day is just a little bit late for me because the stop will be so wide, and I'm not sure what was your stop loss. I mean, looking at where you partialed, I think it was a new 1-minute low. Was it there? The 9 a.m. I was stop loss. Yeah, so basically almost a new 1-minute low. I like one thing there. So yes, you got in late maybe, or you got in as planned and you had a wide stop loss. You didn't partial earlier on the way up. You held on for a good risk to reward, and only then you took a partial. This partial was also smart. Stock was making higher highs and higher lows on the 1-minute chart. you kept holding on it, you held as long as it was making higher lows on the 1 minute chart. Once it did a new low, you took more partial, and then you started partialing on the way up, and you took another partial after a double top. So yes, some partials are not really necessary, but I love how you are considering to take your partials. First thing, at 2 to 1, right? After that, on a new 1 minute low, another partial if you had still a lot of position left after the double top right there, and then at the breaks of the highs of the day. So the exhaustive volume is an increasing volume. If you are having a stock which is trending clearly all the way up, then at some particular area, the high of the day or the low of the day, you are having a really huge spiking volume. This means that at this area, a lot of buyers and a lot of buying and selling is happening, right? Unusual large buying and selling. Buyers are trying to push the price higher, sellers are trying to push the price lower. Maybe a really huge player was sitting right there and he got filled at his position, and because of that the exhaustive volume appeared right there, and after that new low, it's just an indicator that this stock already moved a lot up there. It's already exhausted and it needs to start pulling back. And how is market moving? If you have a huge seller sitting right here, a huge ask, let's say something around, I don't know, 180,000 shares, okay? This seller right here, he didn't use his full buying power, right? Those big players, they move the price. We all know that the market is controlled, right? They are moving the price up. It's going up. They're adding some support. They're buying more of these shares. They're getting the price till it hits their huge share size. Once their position is getting filled, they don't care about it anymore. They don't care whether it goes long or whether it goes short. He manipulated maybe the market a little bit. He drove the price to go up. He was buying it until it goes to his direction. After that, he doesn't care about it. He's off his position. Now let it do whatever it does. If it's still strong, it will do a pullback and then it will just simply continue going higher. Mick, let's see your trade, and after that we're having Edwin. So let's see what you did there. You tried to catch in a reversal. Now remember this is just quick sign why you wouldn't have taken this thing to the long side. First time the stock goes into a support, most of the time it's bouncing out of it. The second time it gets into it, not all the time, but most often it's just simply breaking it. So maybe I would have considered taking it to the long side right here. Why? For a parabolic reversal. Stock is dropping down, extended from the 9 moving average on the 5 minute chart. It's closing as a hammer at the low of the day. We're having a daily level, we're having a new 1 minute high. Not a bad long, all the way to the 9 moving average on the 5 minute chart. And remember, why did we get into the long side here? Because the stock is extended and because we're expecting a pullback, not a reversal. If the stock is making more of a move, then that's good. If it's bouncing off the 9 on the 5 minute chart, then most likely now it's starting to form a reverse A, B, C, D pattern. First time it's bouncing off support, second time it's breaking it, and this is the second time it's getting into the support, second time, which is the breakout, and that's why I wouldn't have really considered taking it to the long side despite having a new 1 minute high right there. Then you are having this shooting star right there. You took it to the short side a little bit early, stopped out. That was a really tight stop loss. Took it one more time for the breakout and you got stopped out one more time, and then you took it one more time for the breakout and it finally worked out. Those all trades could have been only one trade. If you take it to the short side here, you could put your stop loss at a new 1 minute high. I mean, first of all, you're getting inside the range. If you're getting inside the range, this is the low of the range, right? This and or this. I mean, this is a week. I wouldn't really consider this the low of the range. I would draw it something like this, right? And that would be the low of the range, the level it actually held right there. If you're getting inside the range, your stop loss should be a technical level, a level that the stock bounced off, which is right here, or you could just simply ignore the wicks and use it at the body right there. Take it to the short side, that's your stop loss. You will ride this whole pullback, then it's breaking out. After the breakout, you could enter into a trade and move your stop loss at a new 1 minute high. So after the breakout, you could use a new 1 minute high as your stop loss. Before the breakout, don't tighten your stop loss because it will just simply continue chopping inside the range. You don't want to get stopped out multiple times before finally the trade working out. It's good that it actually worked out well. I love that you held into your winner closer to the daily levels, and then new highs. So let's see what you did here on MGM. You tried to take it to the long side at 10:30. Now this is not bad, and remember, usually I don't get into the long side on the third continuous candle unless there is at least a consolidation area, and I could see that there is a consolidation area right there. So it's going up, it's starting to hold the level, it's starting consolidating in a range right there. You're taking it to the long side. One thing though, when you took it to the long side right here, you got in within the range. This is the high of the range right there, right? And somewhere right there is the low of the range, either here or maybe lower. I'm not sure what was before there, but remember, when you're getting inside the range, make sure to have the stop loss at the low of the range. If you're getting in at the breakout, then you could put your stop loss at a new 1 minute low. You get in here within the range and you got stopped out a little bit earlier. I think you would have been stopped out anyway, because I see that it wicked down right there, but that's only in this trade. On other trades which could work, most of the time they'll be holding the support area and you'll be stopping out less often. Yes, you'll be stopping out sometimes even before it's actually working out, but that will happen less often and you will just increase your win rate by doing that. So you're getting back in after you notice that it's still working there. It's breaking the high of the range. You took a 50% partial. Was this a 2 to 1? Okay, that's good. It got 2 to 1. You locked 1R right there. Daily level, you start taking 30% partials, then 50%, 50%, 50%. I think 50% is just a little bit too much, right? If you are getting in, just let's assume 100 shares, okay? The first 50% partial, you are left with 50 shares. The second 30% partial, you are left with around, I don't know, 35, let's assume, shares, okay? The second 50% partials, you are left with 17 shares. You are left with 8 shares, somewhere around that. You are left with 4 shares, and then you exit the 4 shares. If the stock is simply going up, making higher highs and higher lows, no pullbacks, it's breaking the high of the range, right? Just starting the move. Higher highs and higher lows on the 5-minute chart, there is no reason to just take 50% partial. You could take 20 or 30% partial maximum, so that when it gets to the intended area, to the strong moving average, to 100 moving average, you still have at least 20 of your position, 20% or at least 10% of your position left for your last partial. If you're taking 50% partial every time, by the moment it reaches your target, by the moment it reaches the good place to actually start taking partials, which is the new 1 minute low right here, or new 1 minute low after doji below a strong moving average, you have enough decent amount shares partial, because this is the moment where you actually should have taken the first partial at, right? I mean, these were good as well. You were having 1 R after each partial, and I do usually partial in terms of R's. 2 R's. First partial, 3 second partial, 4 second partial, 4th partial, 5, 6, 7 R's. But if you take 50% partials every time, by the moment it reaches the 7R, you will have only 3 R's realized, or maybe 3.5, right? Was that the average you got in this trade? Yeah, you see, it was 3 or 3.5 in a 7R trade. If you get 30% partials on all of those, you could lock in by the end with 4.5 or 5 R's. But yeah, still good job. I like how you managed it, and I like that you actually held onto this trade. You didn't just simply exit all at 2 R's. Let's see, okay. Let's open this here. Perfect, you're welcome. Now let's see what you did, Ken. Opening range breakout, and J-Bone, was this the trade you also tried to catch? and this wasn't bad. I mean, look at this, it's going up, small consolidation area, and M, it was uptrending on the daily, right? It sold off at the open, it squeezed above all the moving averages, started doing some sort of an ABCD pattern, an open range on the 5-minute chart above all the moving averages, so you took it to the long side. This wasn't bad. It didn't work out as intended. I think if you had a really wide stop loss on this one, you wouldn't have partial there, but I think your stop loss was a new 1-minute low. Because of that, you took a partial at the intended R, and the rest are break even. So yeah, this was good, and unfortunately it just simply did not work out well. NVDA, this was a parabolic reversal. This wasn't bad right there. Chatroom called for AMD, but already so extended, so I waited for a reversal, and NVDA looked even weaker. So look at this, uptrending with no pullbacks, extended from the 9 on the 5-minute chart, starting doing some parabolic price action up there. It started topping out. This wouldn't have been a bad entry to the short side. This wouldn't have been a bad entry to the short side. So if you shorted here, you will get subbed out, and that's fine. We just look at the price action and we try to get good entries. We don't know when exactly it's going to work out. So we are getting in here, you're getting subbed out, down 1R. Totally fine. You're getting on the next new 1-minute low or new 2-minute low, and then it works out all the way to the 9 on the 5, and with that tight of a stop loss right there, which is around 50 cents, and a move which is around $3.50, yeah, $3.50, this is 7R move, right? If you could manage to take small partials, and I see that you took the first partial at 3 hours, yeah, 3 hours for first partial, then around 4 or 5 hours at the second partial, and then all the way down you will have around 5 hours in average on the 7R trade. You'll cover your first loss and you'll make more gains on this one. So yeah, good job here. Yeah, 3R on the first partial. I see that. Good job, Ken. No, let's see what you did, and after that we're having LAL. So you traded BA, and let's see what you tried to do right here. This is the 100 moving average, the daily level. You took it to the long side at 218.76. It's somewhere right here. Let me get the yellow line. 218.86. It's somewhere right here where you get into the long side. 218.76. This was your entry, right? And your partial at 219.49. It's somewhere right there. That was a small move right there. What was your stop loss right there? So you get in at 218.76. And if you put your stop loss at least at a new 1-minute low, and I think that should be the maximum, the minimum which you should give it, right? That would be around $1 stop loss. And you took the first partial at less than 1R, right? The yellow line is the stop loss. Okay, now this was a little bit tight for a stop loss. Why is that? This moving average, or this yellow line here, it's not a technical level. It's not a level which is holding the price. You could see that it's just simply trading around it, right? It's just going up and going down through this yellow line. It did the same thing right there, right? It's just simply not respecting this yellow line right here. So it's not the best technical level to have your stop loss at. It could just simply go up, you get into the long side, and within the same candle, it could go down and get you stopped out. So yeah, this was a little bit too tight. The best level to have your stop loss at, like the best, it would be somewhere right here, but this is too much. After this entry, I mean, if you take it right here, this would be the stop loss. If you are getting in this candle, at least the stop loss should be the low of this candle, because you can't put your stop loss within the consolidation of the candle itself. And the candle still didn't close, right? Imagine the candle was a red candle, it came back to green, you're taking it to the long side, and you just decide to put your stop loss at the low of the body, which still didn't close. It could simply just go back down and come back up, get you stopped out, and then work out. Just too tight to have a stop loss at new 1-minute candle. This is the 5-minute chart. I see that. Okay, now let's see. After that, you took, yeah, that was a little bit early partial, and you exited the rest up there, but look of how much it moved, right? So BA does move a lot, and you can see that in the pre-market it moved from 228 all the way to 220 with no pullbacks. After the market opened, it went from 226 all the way to 215 with no pullbacks, which is $11, right? Looking at the previous data, you could just get a feel of how much the stock moves and how much it just pulls back or consolidates, how much move it makes in one candle. And you can see this is the 1 minute chart. Each 1 minute candle is around $1, right? So you're taking a partial at 70 cents when each candle is moving $1. That's just a little bit too early. It's good that you managed it. It's good that it's worked out. I like how you read the price action. I like that you took it to the long side right here. You didn't wait for a reverse ABCD pattern because it still wasn't ready for a reverse ABCD pattern. It was going up on higher highs and higher lows, so you consider taking it to the long side, and that's really good right there. One thing to work on is to make sure you're having technical stop losses and to hold on to your winners. Lou, it depends. Is there anything on your way? Is there any strong level on your way or no? If it's just simply making higher highs and higher lows on the 1 minute chart and you already made 10R, I would simply hold on to it until it makes a new 1 minute low. If I get 10R and it's getting into daily level or strong level, I would just lock in 8Rs, 80%, 70%, somewhere around that. So Lal, let's see what you did there. And after that we're having Lou. So Lal traded AMD and we saw this trade. This is a really good one. It's a 5 minute open range breakout with an ABCD pattern on the 1 minute chart. You're taking it to the long side, really tight stop loss below the consolidation area, and then start partialing all the way up. Classic ABCD pattern and classic open range breakout. So clear. Good entry there. I'm not sure why you were watching it. Did we have it on our gappers list? I mean, it was really clean, and I regret that I didn't have it on my watch list earlier in the day. Yeah, this was a really good one right there. This ad, I wouldn't have added it because remember, we don't add on the way up. This just ruins our risk to reward. Imagine adding right here, your average is down here, stock pulls back to the non-moving average in the 1 minute chart, gets you subbed out, and then it makes the move. That could happen, right? But other than that, this was amazing. I love it, and this was a good move right there. An ad right here wasn't necessary. I think it took it to the long side, or this was short and a partial. I think it's the, let's see, 9. Yeah, I'm not sure it's this blue line actually. It could be a view up, but it's just so close to be a view up. Anyway, so if this was a long, I wouldn't have taken it to the long side because it was already extended from the non-moving average on the 5 minute chart and it started topping out. If it was a short, then it was a good short right there, but this was a really early partial. Maybe you just panicked and you exited on this one. How did you people notice Apple, Nvidia, and yeah, that's what I'm wondering. Where did our members get those stocks to the watch list? Really good job there. I didn't pay attention to the semis today. Lou, let's see what you did, and then we will have Sam. So Lou, let's see what you did. You took Oxy to the long side, and I like that. I mean, this is not bad. Looking at the 1 minute chart first, it's going to the upside. It's holding this level right here, but you're having buying pressure, right? It broke the low of the consolidation, but got bought back up. Tried to sell off one more time, and it got bought back up one more time. Took it to the long side on the 1 minute chart at the break of the 1 minute consolidation. Stop loss down there. Added more at the breakout, and it simply got you sucked out. Looking at the 1 minute chart, this was good. Let's see what we had on the 5 minute chart. On the 5 minute chart, I wouldn't have taken it to the long side. So you see this right here. I don't love taking stocks to the long side after the third continuous candle. It was the fourth and this was the fifth, right? This is already too much, and after that I expect stock to do a pullback before it continues going higher, or simply just sells off like what happened right there. So it's just my rule, and it's helping me a lot. I'm having way less losses because of this rule. I never get in to the long side on a third continuous candle. unless the candles are small. If you're having one candle like this and then another candle like this and then another candle like this, I might take it on the third. I might even take it on the fourth, which is right here. If the candle is like this one, then the second is like this, and then the third is like this, that's just too much to get in right here. Those weren't so big, but still I'm not sure I wouldn't have taken it on the third. This is already just so late. This made the move right there. So yeah, the 1 minute chart was looking good. The 5 minute chart wasn't really ready. Sam, let's see what you did there. SRNE, you try to get and look at this. This is the same thing. I'm not sure if this was a long right there, but I think this was a long, and it's the same thing. I wouldn't have taken it to the long side. Why? Because it's 1, 2, 3. Third continuous candle, and then a dump happened. It dropped down, started holding this moving average right here. You took it to the long side. I'm not sure what happened in the 1 minute chart. You sent a screenshot. I'll take a look at it. Let's see what you did right here. What time was this? This was there. Okay, this was good. Look at this, guys. It's every time it's getting into this moving average. Yes, it's breaking it a little bit, but it's closing above it. It's closing above it, and you could see a double top right there, a double bottom right there. He didn't chase it, didn't take it to the long here, didn't take it to the long here, and didn't take it to the long here. He waited for a pullback, and that was smart. That was the pullback right there. It pulled back to the 50 moving average on the 1 minute chart. New 5 minute high where he took it to the long side. That was the long, and this was the stop. Really good stop loss right there, and then partial all the way up. So yeah, this was a good one right there. Let's see your second trade right there. Opening range. So this wasn't ready for an opening range breakout, right? Because the opening didn't happen yet. It was a new 1 minute high after a decent drop right there. I see that the previous candle was a doji at the low of the day, and then it did a new 1 minute high. Not an open range breakout, but still you try to get to the long side, and I like that you partialed at the VWAP or at the technical level. So this wasn't the best trade right there. It was risky because it was expected to do a reverse ABCD pattern, especially after it broke down. But still, not the worst setup, of course. ABCD pattern which failed. This wasn't really an ABCD pattern. Strong move up there. I bet it was extended from the 9 on the 5. I mean, looking at this move right here, it's definitely extended from the 9 moving average on the 5 minute chart, and it did a pullback only to the 9 on the 1, right? And I don't love ABCD patterns which pull back to the 9 on the 1 minute chart. Better to see it at the 9 on the 5 or after a bigger consolidation. This is the first thing. The second thing, this was only 20% pullback of the move after, I mean, this whole move right here. This is the pullback. And yeah, and this is whole the move right there. So it was around 30% pullback, not so much yet. The third thing, it didn't do the D part. It didn't make the new high right there. And after a parabolic pullback, it wasn't small pullback, right? I mean, decent pullback, which is going like this, lower lows and lower highs. It just dumped down. After a parabolic pullback, I usually wait for a W shape right there. Good that you had your stop loss at technical level and get stopped out. Didn't hold on to a loser. And Jason, sorry Sam, I wouldn't be able to go through all the trades. We are taking 2 trades at a time because there is no time. Just to be able to cover everyone. TP, let's see what you did. You traded save. That's a lot of trades there. Shorted it on a 1 minute open range breakdown. So I wouldn't have shorted it on a 1 minute open range breakdown because the first candle was so huge, right? Yes, it's a 1 minute open range breakdown because it made a new low, but this candle was so huge right there that I'm not sure how much is it going to move more. How much is it going to pull back? On open range breakouts, if I don't have a technical level to have stop loss at, I put my stop loss at the half of the candle, and a half of the candle is just too much to have the stop loss at. Now, let's see what it did after that. Took it to the long side for an ABCD pattern right there. I could see that the pullback wasn't to the 9 on the 1 minute chart. It was a bigger pullback right there. Came back up a little bit late for an entry, right? Right here. I mean, the best entry is once it breaks the consolidation area, but still I wouldn't have taken this ABCD pattern because of the parabolic pullback. What would I have waited for? I would have waited for a W shape, which is right here, and this would have been my entry. And yes, I would have entered it, and most probably I would have been stopped out. This is my entry right here. This or this would be my stop loss, and I'll get stopped out right there. Then you started averaging in a short, looking for a yellow level rejection. So this was daily level right there. It was breaking it up but chopping around it. It couldn't make a new high. You could see that this was the high of the day. First of all, this was the high of the day. It broke the high of the day, but not with a huge move. Came back down into the range, broke the high of the day one more time, but couldn't make it to the high of the day. Broke this level right here, but couldn't make it to the high of the day. Sorry, I think I'm listening to Thor. Perfect. Started making lower highs right there. Small double top right there. Getting back into the range, which is a weak sign, and you started getting into the short side. These two, I like them. I mean, these two shorts right there, they were good. These ads, I wouldn't have added them. I wouldn't have used, because we don't add on the way down. We simply wait for pullbacks. But this was amazing right there. Good job holding on to this thing. Quick short scalp. Wouldn't have really taken it. I see that it worked out, but it's just a little bit risky, right? When the stock is reversing, you don't know how much of a pullback is it going to make. We need to try to trade the range. So yeah, little bit late right here, early right here, but I mean, even if you waited, this would have been a loser right there. Good entries, little bit late ads right there, wouldn't have done them, and this was a little bit risky, but overall, good job. Jason, let's see what you did right there. Again, same thing. You see, guys, that's why I don't take a new 1 minute open range breakdown when you have a huge candle right there. So yes, this is a new 1 minute range breakdown. On TP case, it worked out. Jason's case, it didn't work out, because this is simply a huge move, right? You don't know where to put your stop loss at, and you don't know how much is it going to move after the breakout. So he took it to the short side right here, and it just simply got him stopped out on the next candle. Short side on the way up. This wasn't really good one. This was already parabolic reversal. A doji came back up, and you get stopped out. So you were a little bit short biased. Then you took it to the long side for a VWAP breakout, but you get stopped out. Why did that happen? Because this again wasn't a small move right there, right? It was around 40 cents move with no pullbacks. You are getting in on the way up, and when you are getting in on the way up, stop loss should be either the technical level or at least a new 1 minute low. It's so hard to put stop loss within the range of the candle. Most of the time you'll get stopped out. You could see that within the candles, the stock is usually being traded. If you take it to the long side here and you put your stop loss somewhere right there, you'll get stopped out, right? If you take it right here and you put your stop loss somewhere right there, you will get stopped out. You can't have your stop loss within the candle. Stocks sometimes even engulf. If you take it to the long side right there and put it at the middle of the candle, you will get stopped out, right? Most of the time, stocks are being traded within the candle itself. You see it, right? So it's tough to have the stop loss within the same candle. Let's see what it... Okay, yeah, so we covered this right here. So Shweta, I think you sent something in the main chat and I forgot about it. I'll take a look at it right now. It's hard to find it here now. Okay, found it. So okay, let's cover this one. What you do? CCL. You took it. Was this long or short? You want me to cover this trade, right? At 1010, it was somewhere right there. It was extended from the 9 and the 5 daily level down there, increasing volume. You took it to the long side and you held on all the way to the 9 moving average on the 5-minute chart. This is amazing, really good, and I love how much held there. It's really tough to hold through consolidation. It's tough to hold when you are in the green, but I like that you held it all the way to the 9 and the 5. This partial was amazing at a new 5-minute low. This, you could have just simply held on to this one, right? Because you did partial at a new 5-minute low, because this looked like a reverse ABCD pattern. you took most of your position out. Now leave the rest just to see what it's going to do. Either it's going to form a higher low wave and then continue to go higher, or it's going to get you back to your break even. So if you are having a strong signal which is telling you to stop out, for example a reverse ABCD pattern, get most of your position out. Leave 10% only, 15% only. Like that will not be much. That will be even less than half R, right? If it works out and makes a move, those 50% could make you 1 or 2 Rs. If they fail, you could just simply exit smaller at break even. My question was, the stock going far from the 9 EMA, is it safe to assume that it will hug the 9 EMA again and break it a little bit till the 20? Yeah, it's not all the time, and that's why it's difficult to know where the stock is going to move or where the stock is going to pull back. And my target is usually the 9 and the 5. After that, it basically is just the candles. If you are having a huge 5-minute candle and this candle is basically around the 9 and the 5, and then you're having a new high somewhere right there, my target will be only the 9 and the 5. If you are having a new in this case my target will be the 9 on the 2-minute chart. If you are having a new 5-minute high candle, like something like this, then you're having a new 5-minute high candle, and then the 9 moving average on the 5-minute chart somewhere right there. So we are having a new 5-minute high, which is amazing. I would expect it to go to the 9 moving average on the 5-minute chart. If we start forming a new 15-minute high candle, after that my target starts to become the 9 moving average on the 15-minute chart. Having a new 30-minute high means my next target will be the 9 moving average on the 30-minute chart. Base it on the charts. If your move is within the 15-minute chart, no new 15-minute high, and the 15-minute high is just so far, my target will be the 9 on the 5 and the 20 moving average on the 5 within the 15-minute candle. You see, it depends on just which time frame you have a new high at. So yeah, that's it for today, guys. Thank you for sharing your trades with us. If you have something I didn't cover and you want me to cover, feel free to email it for me. Guys on YouTube, thank you for being here. If you have any questions, feel free to email me at ayman@beerbulltraders.com. Have a good day, everyone, and see you in the chat room.